Yeah, it took me a few videos, but I'm a man of my word, and today I'm going to reveal what I'm holding in my Roth IRA number 2 account. I invest with M1 Finance, and if you'd like to get started with investing, definitely check out my M1 referral links below to get some free money just by signing up. But like I mentioned before, I have 4 accounts with M1 Finance, with the biggest 2 being Roth IRA number 1 and Roth IRA number 2 accounts. I already went over what I hold in my Roth IRA number 1 account in this video, so check it out if you haven't already, but I only hold individual stocks in that particular account. But for today's account, Roth IRA number 2, it's a bit different because I hold 50% individual stocks and 50% ETFs. I've allocated these 2 Roth IRAs differently because I want to compare their annual performances and see whether holding 100% individual stocks is better or if doing 50-50 is better. We already know what Warren Buffett is thinking. He's calling me an idiot and telling me that the best thing to do is to own the S&P 500 index fund. Well, like I talked in my last video, I think owning an S&P 500 index fund is a terrible investment. So let's not dilly-dally, and here's my Roth IRA number 2 account and the 14 different holdings I'm invested in. Let's start with the 4 ETFs I'm holding that makes up 50% of my portfolio, and they are VGT, Vanguard's Information Technology ETF, VCR, Vanguard's Consumer Discretionary ETF, VIG, Vanguard's Dividend Appreciation ETF, and VOX, Vanguard's Communication Services ETF. As you can see, all of the ETFs are from Vanguard, which I like because of their low expense ratios, and they have a whole bunch of ETFs to choose from if I want to change things up in the future. But trust me, it won't be to their S&P 500 index fund. And if you look on Vanguard's ETF list, 3 of the ETFs I'm holding, VGT, VCR, and VOX, they're found down in the Sector and Specialty ETFs section, while VIG is going to be found in the US Stock ETF section. VGT is my biggest holding at 20%, and the top 10 holdings of VGT are Apple, Microsoft, Visa, Nvidia, MasterCard, Adobe, Salesforce, PayPal, Intel, and Cisco. VCR is next at 15%, and the top 10 holdings are Amazon, Home Depot, Tesla, McDonald's, Nike, Lowe's, Starbucks, Booking Holdings, Target, and TJX Company. VIG sits at 10%, and the top 10 holdings are Microsoft, Walmart, Procter & Gamble, Johnson & Johnson, Visa, Home Depot, United Health Group, Walt Disney, Comcast, and Pepsi. And finally, VOX only makes up 5%, and its top 10 holdings are Alphabet, Facebook, Verizon, Netflix, Comcast, Walt Disney, AT&T, Charter Communications, T-Mobile, and Activision Blizzard. And there's some overlaps in the top 10 like Microsoft, Home Depot, and Walt Disney, but because of the different percentages in each ETF, not one stock carries enough weight to influence the overall portfolio. In my last video, I discussed my dislike for just investing in a broad market S&P 500 index fund, and I gave a better way to build your portfolio by choosing specific sectors that you believe in. And for me, tech sector is definitely a no-brainer, and I foresee it contributing to the bulk of the gains I'll be receiving in the future. And that's why I'm comfortable holding VGT as the biggest part of my portfolio, even though that means I'll experience bigger swings in the market because tech stocks are more volatile. I'm okay with it. The second biggest holding being consumer discretionary, it does add to the volatility because whenever we're going through an economic uncertainty like we're going through right now, people, they usually have less disposable income to spend. But in the long run, the world runs on consumerism, and I don't see that changing anytime soon. I decided to go with VIG, Vanguard's Dividend Appreciation, because it gives me a better dividend percentage than VGT and VCR. And it includes stocks in the healthcare, finance, and industrial sectors, so it provides some needed diversification. But because VIG has less market appreciation than tech and consumer discretionary, I'm limiting the upside. And finally, I'm keeping VOX, the Communication Services ETF, only at 5% because even though it includes high-growth tech names like Alphabet and Facebook, the other components don't provide a lot of growth. I think I might end up selling VOX entirely and just holding VGT, VCR, and VIG, but I'm just letting it, ride for right now. Of course, past result doesn't indicate any future returns, but I thought it would be good to see how my 4 ETFs have performed over the past 5 years. and I created this pie to hold just VGT, VCR, VIG, and VOX. And with the dividends reinvested, these 4 ETFs, they're going to give me an annualized return of 26.42%. Meanwhile, if you look at VOO, Vanguard's S&P 500 ETF, it's only provided a yearly return of 10.6% over the same 5-year period. Once again, not saying that my current ETFs are going to be performing like that in the years to come, but I believe my allocation will greatly outperform just holding a broad market S&P 500 index fund. So, that was my ETFs I'm holding. That makes up 50% of my Roth IRA number 2 portfolio. And let's quickly go over the other 50%, which is comprised of individual stocks. You'll see the overall theme that I have with my portfolio, and it's usually catered toward tech because those are the stocks that I'm comfortable with. As you can see, all individual stocks are currently set at 5% of my total portfolio, but if they end up going over 5% because of market appreciation, I just let them ride and I don't try to rebalance them manually. And the great thing about M1 Finance is whenever I place a buy order, M1 Finance, it automatically buys the stocks that are more underweight, so my portfolio stays balanced. And this is a great feature that I haven't seen in other brokerages, and this is the reason why I believe in M1 Finance is the best investment platform for a lot of people. But in any case, in total I hold 10 individual stocks, each at 5%. And from the very top, I own Alibaba, which is the only non-US stock that I own, and Alphabet, Amazon, Apple, Disney, Facebook, MasterCard, Microsoft, Tesla, and Visa. Like I said before, I like my tech stocks, and if we categorize the sectors I'm invested in with this particular account, it breaks down as follows. This is going off of Vanguard's definition of each sector, but my tech holding consists of VGT, Apple, Microsoft, Visa, and MasterCard. It makes up 40% of my portfolio. Next, we have consumer discretionary, which is going to be holding the VCR ETF, Alibaba, Amazon, and Tesla, and it'll be 30%. And VIG is a standalone at 10%. And finally, communication services is going to have VOX, Alphabet, Disney, and Facebook at 20%. So there you have it. 14 different companies and ETFs I own in my Roth IRA number 2 account. I guess you can say I technically have 15 stocks since I own both classes of shares of Alphabet. And of course, past results don't predict future outcomes, but if I held my portfolio for the past 5 years as is, my annualized return would have been 43.65%, which is insane. And my current portfolio is sitting at $23,489.96, and if I were able to get the 43.65% every year until I retire at the age of 60, and let's say I didn't put any more money into this portfolio, my current portfolio of $23,490 is going to turn into almost $1.8 billion. So yeah, if you want to witness my journey to become a potential stock market billionaire, don't forget to subscribe and hit the like button as payment for being so transparent. And we're currently 2 subscribers shy away from reaching that 300 subscriber milestone. So, help me get there. I greatly appreciate it. But that's all I have for you guys today. And if you're looking to start on your investment journey and you don't know where to invest, as always, definitely check out M1 Finance and use my referral links in the description to get your free $10 when you sign up and fund your free account. Thank you for stopping by as always. Happy investing. I'll catch you next time with more shenanigans.